Now, from IPA to IPO, well, that's good. There we go. IPA to IPO. AB InBev is trying once again to list in Hong Kong. It's 2 months since it scrapped what would have been the biggest IPO of the year. The brewery owns hundreds of brands, including Budweiser and Stella Artois. Clare Sebastian is with me in New York. When they scrapped the last one, it was last minute. They did it very late, and there was confusion overnight about how and why they were doing it. And it was only the following day we got a lily-livered weak answer about market conditions. What's changed?
Well, I mean, there's still not very much detail around this, Richard. It was a very short statement. They said that they're going to look again at doing this. There's still no assurance that it can happen. And just as they said when they scrapped it in July, they're still saying that prevailing market conditions could be a factor going forward. But there are a couple of differences here. The key one is that the business that they're now set to IPO has changed. They've sold off the Australian unit. They did that just a few days after they scrapped the idea for an IPO back in July. So it is a smaller, potentially offering a more focused one, potentially more focused on China, which is one of the fastest growing parts of their business.
But it's all about reducing debt for AB InBev. And to that extent, all right, so they've got rid of the Australian part. It focuses it. But the market didn't like, I mean, we watched this IPO at its initial valuation just get slowly lower.
Yeah, and I think, look, I mean, there's speculation about what they mean by prevailing market conditions. Could it be external factors like the protests going on in Hong Kong, or could they just be talking about the fact that the market wasn't quite ready for the valuation that they were looking at? And I think that's why they're trying again at a smaller scale. But yes, Richard, this is a company that has more than 100 billion of net debt on its balance sheet. That comes mostly from the acquisition in 2016 of SAB Miller. They are aggressively trying to cut that debt. They've already cut their dividend in half, but that was part of the reason for selling off the Australian unit. So they do, I think, still need to find other ways to do it. And I think that's why they are looking again at this IPO. One of the key reasons, although they're billing it, of course, as a way for investors to get access to one of the key markets for beer in the world, which is, of course, Asia, and in particular, China. All
right. So finally, is it like, I mean, they're being canny, some would say obscure about if and when. When do you think?
I mean, that is really hard to say. It could be as soon as a couple of months, but I think they're going to have to look at the appetite for this. It was, of course, a little bit dubious last time around. And, of course, the external market conditions as well, Richard. There are a bit of mixed messages with the issue of the LSE acquisition from the Hong Kong IPO and whether or not, the international community will want this. But I think, the key is that the Chinese consumer, the Chinese market is still something that interests investors.